Hey, good morning, everybody. It is Friday, July 31st, 2026. TGIF, baby. Thank you for joining me. My name is Hammer. I'm the founder of Hammer Solutions, home of great products such as Originator, Success, Grab and Go Social, and Rate Sensei. Be sure to check those out. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, broadcasting to you on Facebook and YouTube. Welcome to all the live folks. You can tell that text went out a little bit faster this morning because a lot less people on. I was just doing a little experiment. So because Sean Segaloff said that he was waiting too long. So I wanted to see. Hello, Sophia. Come say hi to everybody. Come here, Sophia. Sophia. She's on the desk here. Here, say hi to everybody. You're on camera. Smile. Look pretty. Look like you would if you were begging for food. So good morning, everybody. Ron Siegel says today is National Raspberry Cake Day. Now I just think Ron's making stuff up. I don't even know what raspberry cake is. Raspberry on top of stuff. Never even heard of like raspberry pie. They have blueberry pie, peach pie, cherry pie. Never heard of raspberry pie though. Why don't we have raspberry pie? Has anyone ever had raspberry pie? I guess that's why they made raspberry cake, but I've never heard of raspberry cake either. Has anyone else heard of raspberry cake? I don't know. It's a bit confusing. So what are you doing this morning, huh? You sitting on my lap? As soon as I start talking, you always come over. You think it's something cool. You always want to see what I'm doing. You're so funny. Silly, silly, silly cat. All right. Well, good morning, everybody. So glad to have you here. Thank you for joining me. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time. If you're watching the replay, do me a favor. Give me a hashtag replay in the comments. Let me know that you are here. And we're going to go ahead and jump in and get started. It is not a good scene this morning. So if we take a look this morning, mortgage-backed securities currently down about 20 basis points on the morning, which means pricing is going to be worse than what we saw yesterday. Not good at all. Not good at all. So basically, pricing yesterday came out. We were right up here. And that was right around 99.44. Now we're down here, 99.11. That's a big, ugly loss in pricing. Not something good, man. Not something good. Hold on. I'm going to move this around a little bit and set it up for you. Here we go. I love when it does that. Get back over here. One more. Okay. All right. So I'll make it a little wider. There you go. So taking a look this morning, you can see here in the 48-hour chart down here, we are just, it's just a big sell-off here. There's really no reason for it. There's nothing to point to that we could argue. There's basically, you could say it's foreign markets. If we take a look at what the price of oil is right now, let's take a peek here. Where is oil? Nope. Last one. Yep. All right. So Brent crude currently up $90 a barrel. That's really not that different where it was yesterday. Let's take a look here. If you do 3 months, it's actually yesterday it closed at 89. So, I mean, it's up a buck, but not enough that you'd really attribute it to this. The other big concerning thing, check out the 10-year treasury yield, 4.71. The fact that it's above 4.7 is ugly. We don't want to see that, and that is unfortunate. So I'm not going to run and suggest you panic lock anything right now, but we definitely do want to consider it. So just to put it in order, quick recap, yesterday was a pretty calm day. You definitely should be getting our text alerts. Let me move this stuff off the screen here. You want to be getting our text alerts. We suggested at yesterday's end of day text to go ahead and lock for this reason. It just wasn't looking like we were going to be in a position where things are going to be good. Yesterday's end of day text, we were up 6 basis points, but it was down from 16 basis points when pricing came out. Now, we hadn't seen any real reprices worse at that point, but you know, it was really just kind of forecasting. So bonds lost ground through the day, not enough to send lenders repricing worse. Nothing really different from this morning. Oil price is basically the same. Again, this is yesterday, but not much expectation tomorrow will bring much. And that's where we're at. If any improvement to pricing. Consider locking some loans for protection just in case, although there's not an urgency at the moment that rates will push much higher. And rates aren't pushing much higher when you see we're down 21 basis points. They're not, I mean, rates aren't going to jump an eighth, but pricing is going to be worse this morning. Rate sheets are generally falling right back in that same area that we've grown used to. Probably going to push back up 6.8, 6.81. We're going to go back to where we were at the end of last week and the beginning of this week even. So you could see right there, after improving slightly for a couple of days, that was the time to grab a little bit of better pricing and run. This is all the same old, I mean, there's really not much that's going to change anything that's going on here. If I seen sounds kind of boring today, it's because it is kind of boring today. Like I said, rate sheets today, they're going to be higher. You're in the higher sixes. This is where things are. The good news is people are still buying houses. People are still refinancing out of necessity. You're not going to see rate and term refis, necessarily, but you'll see cash outs and debt consolidation. Reprice risk on the day is low to moderate. We're down 20 basis points. It's a summer Friday, which means from this point forward, traders are leaving the office. It's a summer Friday, but low trading volume means that you could see some exaggerated moves in bonds, and that could poise a little bit of an ugly setup. But reprice risk on the day is still low. You're probably going to see lenders price a bit conservatively on a Friday and move on. And, for the next week, we've got unemployment data, you got BLS jobs data. I'm not really in a locking stance this morning. I don't like locking when we're down 20 basis points, but I am concerned that the 10-year treasury is at 4.71. That concerns me and makes me want to lock. So I'm a little bit torn for loans closing in the next few weeks, at least. Anything that's 3-4 weeks out, I'm not as worried about. But 4.69, 4.67, these were our previous highs. Now we're at 4.71, and we haven't seen that in quite a while, that high. So it's ugly. It's ugly. That's not where we want to be by any means, and it's concerning. So we'll take a look and see. But I mean, I don't want to suggest that you lock, but you may want to lock because it could get worse over the weekend, especially if oil prices push up. A couple of things. We'll go over some headlines real quick, and then I'll wrap up today. Siegel said, would we prefer National Avocado Day? Yes. Yeah. I'm not an avocado fan. Who likes avocados? Who likes guacamole? Guacamole. That's a song. It's a YouTube thing. I'm not a big guacamole person. It's just not my jam. However, it's good for you. Avocado toast, it's good for you. Better than National Raspberry Cake Day. I don't know. Ron Siegel, yeah, you were pointing out what the Japan thing. Japan's the largest holder of U.S. Treasuries. They're selling to prop up their currency. But again, if that plays a role, I agree. And there's not much going on. So it's definitely part of it, but doesn't mean that we can't see things continue to get worse with that. So that's kind of the concern. Now we're up to 4.72 already. So MBS down and Friday, not a good combination. I agree, Mr. Tebow. I agree. Ms. Richardson loves avocados. Tim Klyla and I are going out for chicken wings because we are not eating avocados. Rob Stewart can't have guac without avocados. Tiffany Teal loves avocados. A lot of y'all avocado people. Y'all are avocado people. So good for ya. TGIF, baby. How many of you have loans that are floating? Just curious in the comments. How many of you have loans that are floating? Next week, we've got the labor market data. You got JOLTS coming in, I think, on Tuesday. We've got, BLS report on Friday. You'll have ADP on Wednesday, which is a little less of a thing now that they've been doing their weekly thing. And Thursday, of course, jobless claims, which have been coming in, stellar, showing everything really well. There's a lot of headline articles here about the Fed. Fed Chair Warsh faces hard choice on inflation after bond market's red flag. This one was a bit interesting. Friday could mark the start of damage control from Warsh's colleagues. Warsh's remarks in his press conference: unsettled bond markets, raised credibility concerns. These are just headlines. This is drama. Fed's next policy meeting set for the middle of September. Kevin Warsh's emphatic declarations on Wednesday that inflation would be brought down without signaling a readiness to raise interest rates triggered a sharp sell-off in bonds that may force a hard choice, defying President Trump's desire for easier monetary policy or battling a growing cadre of fellow U.S. central bankers determined to tighten it. And of those bankers who want to tighten it, the Fed officials that wanted to tighten, you've got Neel Kashkari, He said he believes small hikes now can prevent the need for larger moves later. We also had Beth Hammock. So let's see if it did it tell us who all they were. Cleveland Fed President Beth Hammock. And the third one that dissented and wanted to raise rates was Dallas Fed President Lori Logan. They were all the dissenting members that wanted to raise the policy rate, fight inflation now, whereas the rest kept things alone. So that's kind of where they're going with this article. And complicating matters was Washington. He may try to switch up the Fed's yardstick for successfully containing inflation, for years defined as the personal consumption expenditures, or PCE, which yesterday came in at, do you remember? I think it was 3.3, 3.7 and 3.3, I think. So core and headline PCE. So let's take a look and see the PCE. Let's see if CNN just puts the numbers on there. Yeah, annual rate to 3.7 for headline and 3.3 for core. So that was what I thought it was. But anyway, that's what we got, my friends. That's it. Ron Siegel, I guess we're sticking with avocados and get a cake. Apparently, this is a healthy crowd for you. You've beaten anorexia. Yeah, me too. Mike Morano, wife has avocados every single morning. Proud of you for weighing in on Warsh. Thank you. I actually like him a lot more than I thought I would. So I thought we were going to get another Pulte. That guy's such an ass. He's an ass clown and hyper aggressive and just a douche. This looks like a good choice, like Bessent. Bessent was, in my opinion, one of Trump's best appointees, and he's left him alone, which even he knows then that he's one of his best because he picks everything else. Debbie is one floating, but might lock today. When's it close? Debbie? But yeah, I mean, we're poised to see where things could creep a little bit higher, especially with the jobs data next week. We'll see what happens. Markets aren't going to expect that, I don't think, to play too much of a role in Fed rate hikes, but it would still play a role with bonds. As far as taking a look like for Fed rate hikes, markets are currently pricing in a lot less of a chance of a Fed rate hike than they were just a couple weeks ago, or even a week ago. So now it's a 30% chance that rates will stay the same. Kind of funny, though, that you don't see much of a change in October because of the political piece of that coming before the midterms. But once you get into December, then that drops. Market's still pricing in a rate hike by the end of the year, possibly to come in September. We'll see. This is going to keep going back and forth. Rates aren't going anywhere, though. They're not going up too much. They're not going down too much. We're just fighting for pricing. You're just fighting for pricing. We're not going to see rates jump, to 7.25. You're not going to see them drop to 6.25. We're 6 3/4 to 7 is your base range here, and then your LLPAs and all the other stuff on that. So for 30-year conventional conforming. But all right, my friends, I'm going to wrap it up on a Friday. Hope you guys have a fantastic day. Be sure to join me on Monday, and we'll talk all about what happened today. Take care, everybody. Make it a great one. Have a fantastic weekend, my friends. Bye-bye.